Hey guys, many of you may have some high yielding dividend funds that pay you nice monthly income, but that decay over time. So I'm going to share with you how to offset decay in this video. We earn over 100,000 per year in dividends at this channel, and many other channels tout their gains per year too, but their performance is going sideways to down as their funds decay. So I'm going to share with you how to get around the issue of decay. So we earn, again, over 100,000 per year in dividends, and also we're up for the day 0.33%, whereas the market is only up 0.5%, the Nasdaq's up 0.19, and the Dow's down 0.15. So we're beating all the indexes on a daily basis and on a year-to-date basis. If you look at these stats below, you'll see that in our brokerage, we're up 31% for the year. Okay, the Dow's up 1, the S&P's up 13, the Nasdaq's up only 29%. So we're beating all the indexes on a daily and year-to-date basis using high-yielding dividend funds that decay. So how are we still getting this performance? How are we up, $2,400 today, which doesn't matter. Again, it's the percentage number, 0.37, when the market is flat. How are we doing this? So first of all, I do it with some margin. If you guys need help with using margin, email me at akintodd48@gmail.com for my e-guides. For every $1 you put in your account, you get $4 of purchasing power. I just use some of that to my advantage. So if you look down at my portfolio at the bottom right-hand side, you'll see this is where my margin debt is. It's about $237,000 in debt, but I earn over 100,000 per year in dividends. So this number will be gone in less than 2 years, less than 3 years, and my account will jump to 700,000, and my debt will be at zero in less than 3 years. And then all these dividend-paying assets will be left to me for life, producing cash flow every month for life. But you have to get around decay. So how do you do that? So first, again, I use margin to tie more of my investments to the indexes. That way I get more performance and I offset decay. But the other way that I offset decay is I have 2 points I want to share with you. One is on Cornerstone and the other is on these triple leveraged ETFs, okay? Stick with me and I'll get to those triple leverage ETFs at the end, because a lot of people tell me I should just go with those instead of investing in Cornerstone or these other passive income funds. So Cornerstone, yes, it decays. Cornerstone is probably the most infamous fund in here because everyone thinks that decays. If you look at Portfolio Visualizer, it decays, but if you go to Morningstar, it shows a different story. It shows that Cornerstone is beating the S&P over the last 10 years. But look at this chart. That is horrible decay. So how do you get around that? Well, with Cornerstone, everyone who subscribes to my channel already knows the answer to this. You have to play the rights offerings correctly. So now we're getting a little bit more performance in the day as the market resumes its little uptrend for the morning. So how do we play the Cornerstone rights offerings correctly? Well, you have to sell before the rights offering. And also Cornerstone is special and it gives you performance because the market price is $8 and then it drips your 21% dividend down here at $6. So $6.49, $6.79, $6.71, 22% gain in that month. $6.79 over here, 21% gain. $6.49 up here, 26% gain. So Cornerstone is special. It has 21% dividend. It drips that dividend at the NAV each month. So it compounds that 21% dividend, gives you those gains I just showed you, and it gives you days gains potential as well, 0.51, 0.43, to give you over $2,000 in gains for the day in Cornerstone. But look at that chart on Cornerstone. How are we beating that decay? Again, we're playing this rights offering correctly. We're going to sell before the rights offering, and we ask for the drip in Cornerstone, the proper drip. You can't just toggle the drip. You have to call your broker and ask for a specific drip, which my e-guides help you with. If you need help playing Cornerstone, email me for my e-guides at akintodd48@gmail.com. For those of you who bought my e-guides on either Margin or Cornerstone, you're welcome to my Discord server for free, which Discord's like a chat room. And we discuss the better, brokerages, where to get the best margin rate, how to get the drip going. When the rights offering for Cornerstone occurs, I will announce it in that Discord server. So all of you guys who bought my e-guides, please email me or text me if you want access to that server. It's free. And that's really the advantage you get when you buy my e-guides. You get my number for free. And most of this stuff is passive. There's not much to ask about. They're all passive income plays. So there's nothing else that you need from me, I realize. So that's the advantage of getting my e-guides, is you get my number to call me anytime, even though you won't need me in the future, I'm pretty sure. But I'm still here for you if you always need me. And I also love talking about this stuff. I'll talk to my clients for hours. And again, if you want that Discord access, just email me or text me and I'll put you on there. So now getting to the next point of the video, first of all, I use margin to offset decay. It gives me extra performance. I also play the Cornerstone rights offering correctly. That's how I offset the decay there and get my performance. And then lastly, we have UPRO and TQQ. A lot of people ask me about UPRO and just maybe I should just buy UPRO or SPXL and then I'll get my performance that way. But look at the decay of UPRO on a 1-year chart, on a 5-year chart actually. Look, it's the old highs were 80 and now it's at 44. If you look at the SPY chart of UPRO, the single that it covers, this is the UPRO follows SPY. You'll see that SPY is almost back at the highs. Okay, see that? Almost at the highs. Okay, almost at the highs. Same for the Qs. Okay, QQQ, if we look at a chart of QQQ, you'll see it's almost back at the highs. It's about 10% off from the highs. But if you look at TQQ, you'll see that it has about 100% to go before it hits the highs. TQQ is at 40, and it was at 80, and it's currently at 40. So you have about 100% upside. This is terrible decay. So why do I own UPRO and TQQ? Well, I only own a small amount, first of all. And then the way to offset the decay in those is to either sell options like I do. I just sell time and I get extra performance there. But also you have to simply buy UPRO and TQQ when the uptrends resume. You can't have them at all times. You have to buy them when the uptrend is starting to look bullish again. And it requires some elements of timing. So that's why I don't have too much in UPRO and TQQ. Plus, if you put all your money in UPRO and TQQ like I had over the years, it doesn't qualify to banks for income. Again, dividends qualify to banks for more loans, okay, not trading. So if you're trying to live financially free and have loans for a house or a car, you can't get them off of UPRO or TQQ. I tried, even though they make you a ton of money over a 10-year time frame in capital gains. First of all, they decay, as you see here. But then secondly, they don't provide qualifying income to the banks for loans. So this is how I level up my account. As you guys know, I get loans from my dividends to get more equity in my account, which then I margin and get more dividends off of those loans. And then the dividends pay back the loans. So this is how I live financially free. I use margin, of course, like I said, and I use Cornerstone as my preferred vehicle to build wealth. And then I do use UPRO and TQQ, but I buy them after the market lows have been established, and I keep small amounts in them because they don't even qualify to banks for income. So why put a lot in them when they don't qualify, they don't help you live financially free, and they decay, as you saw on the chart. So keep a small amount in these. Put a bulk of your money in these other funds like a Cornerstone. All these other funds, they kind of decay too. Like they're covered call funds, so they will decay, and you have to drip your dividends properly there to offset decay. But you also need performance, and so Cornerstone gives you best of both worlds. You get the decay offset with the dividends and with the first of all with the drip at NAV that offsets decay. And then usually you get 30% premiums to NAV and Cornerstone before the rights offering happens. You just have to learn how to play that rights offering. So you can potentially get both days gains and dividends out of Cornerstone if you play it properly. Again, email me at akintodd48@gmail.com if you need help playing Cornerstone. So that'll do it, guys. This video is on decay and how it can really kill your account. You can't just get dividends. You have to get performance, and I get performance from Cornerstone if you play it properly. Also, these other funds, if you drip them properly, you can get performance there. And then with the triple longs, you can't just buy triple longs like people ask me to do, like SPXL or Soxel. They decay like crazy, and they don't qualify to banks for income. So for loans, they don't act as qualifying income for loans. So this is the truth, the highest truth that I've learned in life. And even though these gains are tantalizing to go for a UPRO and TQQ, I've been burned by the decay, and I don't want to keep getting burned. And I want qualifying income from banks to keep getting loans, to keep leveling up my account. So that'll do it. If you have any questions, leave comments in the section below. Remember, if you already bought my e-guides, head over to the Discord server, and you can find a lot of the information you're looking for on your drip programs or on your margin rates. You can find a lot of it there in the Discord chat room. So email me if you need to switch over to that, if you want me to add you to the Discord server, or text me, and I'll talk to you soon. Thanks.